Welcome back to Appleseed Podcast, where we believe the root of financial freedom begins with education. I'm David, your host, and today we are taking a deep dive into a topic that affects every single person in the U.S. economy, whether you realize it or not: the Federal Reserve. We hear about the Fed all the time in news and financial discussions, and especially when people start talking about inflation, interest rates, or government policies. But how much do we actually know about what it does? More importantly, how does it impact your money, your job, your future? That's what we're going to break down today. So let's start with the basics. What exactly is the Federal Reserve? The Federal Reserve, or the Fed, as it's commonly called, is the central banking system of the United States. It was created in 1913 with the goal of stabilizing the economy and preventing financial crises. Now, probably thinking, okay, how does it do it? The Fed has three main responsibilities, and that is controlling the money supply, regulating banks, and setting interest rates. Now, these responsibilities directly impact how expensive it is to borrow money, how much money is in circulation, and whether the economy is growing or shrinking. Now, I want to get this out the way. The Fed is in no way, shape, or form a part of the United States government. It is a separate, completely separate entity with its own sort of board of governors. They either own businesses, financial firms, or have served served the government in some official capacity. Just like a Supreme Court justice, certain positions are nominated by the president and confirmed by the Senate. Each board member serves one 14-year term and cannot be reappointed. That's a long time to be serving. 14 years, that's as long as a generation. Huh. Ooh, man, I'm still learning. Huh, my big age. Yeah, a lot to learn. Um, but with all that being said, the board members' focus should be on the economy and not have any political leanings in either direction. One way to think of the Fed is like a thermostat for the economy. Things start overheating, meaning inflation is rising too fast. It turns down the heat by raising interest rates, making it more expensive to borrow money. Now, this in turn should slow down spending and helps keep prices under control. And that's borrowing not just from you as an individual, but businesses as well. All right. On the other hand, if the economy is slowing down, the Fed turns up the heat by lowering interest rates, making it cheaper to borrow money, and encouraging businesses to invest and hire more people. So, why should the average person, why should you care about what the Fed does? The biggest reason is because its decisions affect your everyday life in more ways than you can think. All right, first, let's talk about inflation. I brought it up earlier. When the Fed prints too much money or keeps interest low for way too long, inflation goes up. Now, that annual average, I think is about 2% per year. But as we've seen, it's skyrocketing. That means everything from rent, groceries, to gas, it's gotten more expensive. If you ever wondered why your paycheck doesn't go as far as it used to, inflation is a big reason why. All right. Next, interest rates. The Fed sets federal funds rates, which influences everything from mortgage rates, student loans, and credit card interest. When the Fed raises these interest rates, borrowing money becomes more expensive. If you're trying to buy a house or finance a car, higher interest rates means you'll pay more over time. But if you're saving money, higher rates can also mean better returns on savings accounts and bonds, meaning they want you to hold on to your money. All right, finally, the job market. Yes, this plays a key part. When the Fed raises interest rates to slow down inflation, businesses often cut back on hiring or even lay people off. On the flip side, when the Fed lowers rate, companies tend to invest more and hire more people. So whether you're looking for a job, negotiating a salary, even running your own business, which generates more income, generates more money, the Fed policies directly impact your opportunities. All right, let's get into some of the controversies and misconceptions surrounding the Federal Reserve. One of the biggest criticisms that Federal Reserve plays a role in is wealth inequality, which we'll discuss in detail in a later episode. I think I'm going to dedicate entire seasons to that. When the Fed pumps money into the economy, it often benefits big corporations and investors first. It pushes up stock prices and real estate values. All while regular people see slower wage growth and rising living costs. Some argue that this trickle down effect only makes rich richer while leaving everyone else struggling to keep up. Professor David Hope, I forgot where he teaches, Professor David Hope wrote an article 2 years ago debunking the trickle down economics and how it only benefits the wealthy. Another major debate is whether the Fed has too much power. As I said before, they operate independently from the government, meaning it doesn't answer directly to Congress or to the president in its decision making. Some see this as a good thing, keeping politics out of economic policy. Others argue is that it's too much power. They argue that so much power should come with more accountability, especially when its policies have long-term consequences for everyday people. I can guarantee you feel it more than these big corporations do. All right, and it's clear of something else about them. They don't actually print money. That's handled by the U.S. Treasury. They print and destroy all the physical dollars. What they do, however, the Fed does, is influence how much money is circulating in the economy by adjusting interest rates and buying or selling government securities. So when people say the Fed is printing money, what they really mean is that it's increasing the money supply through its policies. So I hope that cleared up a little bit of what's going on with the Fed. Big takeaway, the Federal Reserve plays a massive role in shaping our economy, whether it's controlling inflation, influencing interest rates, or even impacting the job market. Its decisions affect all of us in ways that we may not even realize. Now, understanding the Fed is just one piece of this big puzzle. Next week, we're diving into another critical topic. It's all about you, maintaining your lifestyle. We'll break down how to balance your income with your expenses, avoid lifestyle creep, and building long-term financial stability. I know this is what you guys are waiting for. The reason I had this premiere episode on the Federal Reserve is explaining how it impacts your world on a micro scale. Even though they make decisions affecting our country's economy, it still affects you. So next episode, when we go over maintaining your lifestyle, what it costs, and how much you're actually spending, you'll see that a big part of it and it have to do with just how you manage money, but the macro scale of how the economy is run. All right, if you found today's episode useful, any help at all, make sure to subscribe, share, leave a comment, and of course, always remember, we're not done until learning has occurred.